All right, here we go. We got Seagate Technology Holdings. Ticker symbol STX. It's at $815 even right now. Over the course of the day, it's up 7.91%. In the after hours, it's up 0.56%. In the last 5 days, it is up 1.31%. In the last month, it is up 44.75%. Last 6 months, it's up 241.26%. Year to date, it is up 194.3%. On a 1-year chart, it's up 676.08%. On a 5-year chart, it's up 762.93%. And on a maximum chart, this goes back to December 13th, 2002, it's up 6,996.85%. Look at that chart. Look at that thing. Straight up right there. My goodness. Alright, they got a 0.37% dividend. That's 74 cents a quarter. They got a PE ratio of 76.86. Okay? So compare that to IBM's 20 something. So they got a PE ratio of 76.86. They got a 52-week high of $84.31. They got a 52-week low of $103.73. They got an EPS of $10.55. With 30,000 employees, 224.23 million shares outstanding, and a $181.73 billion market cap. That's Seagate. So Seagate rose approximately 8%, fueled by an exceptional Q3 earnings beat and raised full-year guidance. Analysts project continued growth as AI-driven demand for high-capacity storage becomes structural. Though some sentiment suggests caution regarding high valuation multiples and recent insider selling activity near all-time highs. All right. So on the bullish view, they got exceptional earnings and guidance lift. Seagate reported Q3 2026 non-GAAP EPS of $4.10, surpassing estimates by over 17%, while revenue grew 44% year over year to $3.11 billion. Management raised Q4 revenue guidance to approximately $3.45 billion, significantly exceeding consensus expectations as AI applications simplify global data storage needs. Structural AI storage demand. The company is entering a new era of structural growth driven by the massive build-out of AI data centers. Major cloud providers are increasingly seeking cost-efficient large-scale storage solutions, leading to reports that Seagate's production capabilities for 2026 and 2027 are essentially sold out through long-term contracts. Record margin expansion. Non-GAAP gross margins reached 47% as 11% point increase in just 12 months. This expansion is supported by the transition to the high-capacity Mosaic HAMR platform, which offers significant cost per terabyte advantages and has achieved a decade high quarterly free cash flow of approximately $953 million. So that all sounds pretty good. The bearish view, there's only two of them here on the bearish view. Significant premium valuation. Trading at roughly $810, the company exhibits a high trailing PE ratio exceeding 75x, representing a substantial premium to the sector median. Some analyst framework indicate the stock is significantly overvalued, suggesting that the current price already factors in aggressive growth expectations through 2028. Substantial insider selling. Recent filings reveal significant insider activity with approximately $66.4 million in shares sold over the past 3 months and no reported purchases. This includes over $12.6 million divested by an executive vice president in May 2026, which can be interpreted by the market as a lack of confidence. Let's look at the earnings. So they had earnings on April 28th, 2026. They beat by 16.56%. They were expected to get $3.52. They got $4.10. They also beat on revenue by 5.1%. So they were expected to get $2.96 billion. They got $3.11 billion. Let's look at, see if they've missed any in the last couple cycles here. So, yep, they missed on revenue back in Q3 2024 by 0.37%. So a little miss, but a miss nonetheless. Then they missed in Q1 2024, also on revenue by 2.58%. And in Q4 2023, they missed by 4.82%. Look at that. All right. Seagate Technology is a global leader in mass data storage solutions, primarily known for designing, manufacturing, and distributing hard disk drives and solid-state drives. The company provides critical infrastructure for a vast range of applications, engineering consumer-grade external drives for personal backup, high-performance storage for gaming systems, and massive enterprise-scale storage arrays for corporate data centers and cloud service providers. As digital data demands grow exponentially, Seagate increasingly focuses on advanced storage technologies like heat-assisted magnetic recording to pack more terabytes into physical drives, alongside offering edge-to-cloud data management services that help businesses securely store, transfer, and analyze massive data sets. That's Seagate Holdings. No, Seagate Technology Holdings. There we go. That's why I keep saying Seagate Holdings. Seagate Technology Holdings. All right. Jeez Louises. Seagate Technology Holdings. Let's see if they got any articles. Seagate Technology Holdings stock notes exchange and earnings keep shares in focus. CEO sells 30,000 shares after exercising stock option. Seagate CEO sells 22,538,700 in stock. My goodness, boy. Seagate stock price falls after CEO's rattling warning. All right. Let's read that. That's 6 hours ago. When did the price fall? Seagate stock price falls after CEO's rattling warning. Dave Mosley's message at a JP Morgan conference knocked billions off the memory complex. It leaves investors with a single question they cannot ignore. A throwaway line from a CEO rarely moves an entire sector in a single afternoon. Dave Mosley managed it on Monday. Speaking at the JP Morgan Global Technology, Media, and Communications Conference, the Seagate Technology chief was asked a simple question: would the company build new factories to chase soaring AI storage demand? His answer rattled the room. New plants would just take too long, he said, and could leave Seagate with more capacity than it needs. That single comment dragged down the whole memory group, pulling Micron, Western Digital, and SanDisk lower with it. It leaves the stock with one debate it cannot dodge, and a high-stakes earnings report waiting just over the horizon. How far Seagate stock fell after the Mosley warning. Seagate shares closed Friday at $795.47, within striking distance of their all-time high. Then Monday hit. The stock dropped as much as 7.5% intraday, touching a low near $723 before steadying, according to investing.com. It clawed back some ground by midweek, closing Wednesday at $751.07. It was up 7% or so today. Added up, and STX sits roughly 6% below its pre-warning level and about 10% under the 834.1 record close it set on May 11th. What Mosley actually said about wafer lead times. Here is the part that spooked investors. Mosley explained that Seagate's recording head wafers now carry lead times of more than 9 months, with finished drives taking another quarter on top of that. Okay. A recording head wafer is the precision component that lets a drive read and write data, and it sits at the very start of a long build cycle. So the company runs a build to order model, giving it visibility only 4 to 5 quarters out. We want to keep that 4 or 5 quarters of visibility very, very solid, Mosley said, but the demand is significantly higher than that. Diverting engineers to spin up new factories, he argued, would slow the pace of improvement that actually drives Seagate's margins. While Mosley was simply making an honest comment, investors heard a leader admit that his company cannot scale fast enough to capture the AI build-out in front of it. Well, I think there's going to be plenty of AI for everyone. I think that's the fucking whole thing here. The supply versus demand debate. Wall Street needs settled. This is the question now hanging over the stock. Is Seagate's AI storage boom supply constrained or demand constrained? The distinction matters more than it sounds because each path leads somewhere very different for the share price. If growth is capped, how many drives Seagate can physically make, the upside has a ceiling that no amount of demand can lift. If the constraint is genuine scarcity against runaway demand, then Seagate holds rare pricing power, and the bears are early. Management has handed both camps ammunition. Nearline capacity, the high-capacity drives sold straight into cloud data centers, is almost fully allocated through calendar 2027, with customers already engaging on 2028 supply, according to Yahoo Notes. That kind of forward visibility is rare for a hardware company. Whether you read it as a wall or a moat depends entirely on which thesis you already hold. The bear case, a richly priced stock with no room to slip. Start with valuation because that is where the skeptics live. STX trades around 69 to 70 times trailing earnings after a run that saw the stock climb more than 600% year over year. That price leaves almost no margin for error. A single soft quarter, a delayed product ramp, or a hint of softening cloud capex could trigger a sharp repricing. The memory sector also has a history here. It has been burned by overcapacity before, with brutal price wars and margin damage that took years to repair. UBS captures the caution. According to TipRanks, the firm raised its target to $545 from $515, but kept a neutral rating, warning the market may already price in the structural improvements. There is also the substitution risk, if solid-state drives encroach on nearline workloads. Today's pricing power could fade faster than the bulls expect. The bull case, scarcity, pricing power, and rising price targets. The other side reads the same facts and sees strength. Citi analyst Asaya Merchant points to sustained, robust demand and a tight supply backdrop, framing the lead time problems as proof of how badly customers want Seagate's drives. The fundamentals back the optimism. Fiscal Q3 2026 revenue rose 44% year over year to $3.11 billion with a record non-GAAP gross margins of 47%. Management raised its medium-term revenue growth target to at least 20% a year, up from a previous low to mid-teens estimate per Seeking Alpha. The price target reflects the conviction. Where other Wall Street firms see Seagate holding. Rosenblatt raised to $1,000 from $500, the boldest call of the year. Evercore ISI raised to $1,000 from $750. Bank of America lifted to $840 from $700. Goldman Sachs raised to $700 from $385. The sources are Yahoo Finance, 24/7 Wall Street, and Investing.com. For long-term holders, scarcity locked in by contract and underpinned by AI capex looks more like durable pricing power than a growth ceiling. What still has to happen for the bull thesis to hold? A blowout quarter is already in the rear view. The next real test comes when Seagate reports fiscal fourth quarter results. The close of its June fiscal year expected in late July per market beat. Management has already set a high bar. The company guided to fiscal Q4 revenue of $3.45 billion, plus or minus $100 million, and non-GAAP EPS of $5 plus or minus 20 cents per its SEC filing. That midpoint implies revenue growth of about 41% year over year, so anything short of it would hand the bears their proof of point. Here is what actually moved the stock when those numbers land. 4 things Seagate needs to confirm at fiscal Q4 earnings. A clean revenue and margin beat against the $3.45 billion and $5 EPS guidance, not just an inline print. HAMR and Mosaic ramp progress, including the Mosaic 5 platform, targeting 50 terabyte drives by late 2027. A quantified demand gap, so investors can see exactly how far demand now exceeds supply. No cracks in pricing discipline, since management has said there are no changes to its pricing strategy. If management can put numbers behind demand is significantly higher than supply, the bull case strengthens. Vague reassurance will not be enough at this valuation. That's according to this guy. What this means for investors right now. For anyone weighing STX, the practical takeaway is about position sizing and patience, not bravado. The stock is volatile by nature, with 44 moves greater than 5% over the past year. A 6% slide on a CEO comment is normal turbulence for this ticker, not necessarily a thesis breaker. If you already own it, the fiscal Q4 report will be a cleaner read than this week's price swings. Wait for the numbers and the demand commentary before adding or trimming. If you are looking to start a position, the valuation argues for caution. Buying a stock price near perfection means you inherit all the downside of any stumble. The honest framing. Seagate's lead time problem can be bullish or bearish, and the next earnings call is where management has to tell investors which one it is. That's by Peace Longer Lounge. Nice. A long information-packed article. That's pretty cool. So, Seagate Holdings, ticker symbol STX. What do we think, guys? I think it sounds pretty cool. Am I buying it right now? Probably not. Take a little more research, a little more time to think about it. You never know, though. You might. Somebody might. Check it out, guys. It's your cousin Dustin. Like and subscribe.